Hi, coming to you from E-mini Trader Pro, educating day traders, here on September 10th, 2017. And I want to see if we can get started a little more quickly here. I will let you be responsible for going onto the blog and reading the statements that explain that trading is very difficult. You can lose more money than you have, and it's always a very risky proposition, so be very careful if you want to trade futures. The purpose of this blog is simply provide you with education to give you a little bit better basis for decision making, but ultimately it all comes down to your discipline, whether or not you might be able to succeed in day trading. Now, what I'm going to tackle today with you is a follow-up from several months later when I made this four-part series, Market Structure, Trade Plan, Strategies, and Tactics, parts 1, 2, 3, and 4 on my E-mini Trader Pro blog. And I think it's a good idea to follow up with even more on this four-part series because I've received so many calls from so many traders all over the world that were very pleased, very favorable towards this series, and they thought it was really sort of a breakthrough in understanding for them, which I never know when, I might put something up there that would be received that well. But it makes me very happy, and so I want to try to go even deeper and see how we can look at this idea of getting a trade plan with strategies and tactics as we did in looking at all these different time frames. And once again, I want to go even more microscopic and consider a specific long-time challenging set of alternatives to scale or not to scale. Is it too risky to scale? Is it hard on the psychology? Is it something you don't want to do because you never want to add money to a loser? You don't want to add to a losing trade? Then you can't scale. Well, this is how people look at it in a very rigid black and white way like that. But what I'm here to show you today is it just all depends how you structure your trade plan, what your strategies and tactics are, and you may find that scaling is the way to go for you and that you do better with scaling than you ever did before. It's all a matter of not going in over your head, starting small, adding contracts in a way where you do draw the line at a certain point when you're down a certain amount of money on the entire position, and you're lost and you're afraid and everything, then you might want to just pull the plug on the trade. But what we're going to see is there are things we can do that make it very much more favorable for our psychology to know when to get into a trade and when we're getting into trouble on the trade, or when we can add to the trade and give it a much higher probability of going in our favor and being a successful trade after a little bit of adverse excursion. So that's what we're going to do. So I want to start with trading from this past week. That was the week of the first week of September in 2017. And then they had the rollover on Friday. So we're going to look a little earlier in the week and see what we can find out as I illustrate a few ways to look at scaling to give yourself an extra advantage compared to the other traders. Okay, now what you're going to see on this chart of the NASDAQ, I'm just trading a very short-term chart, 162 volume. The bars form very quickly. But that doesn't mean that I'm trying to watch every tick, and that's the basis for when I decide when to get in or out of a trade. No, what you see are those lines I've drawn, which you can draw based on almost any criteria that you're comfortable with that sort of divides the market up in an efficient way. What I'm looking at here is I'm looking at this range, and I'm seeing, that's an obvious kind of a target point to break out, as it did here on the upside. But then you never know how far is it going to go. Same thing, we can draw one here. So whether the market goes up or down, what we're doing by identifying logical places where a lot of traders are going to be looking to buy a falling market or to sell a rising market, that we want to identify those places and add to our position as we get to the next level, which is another high probability level that maybe it'll turn very close to that level because of the relationship to past trade action. So we have this little um, up and down, buyers and sellers even period when you look at the market profile way of understanding it. So we have an indecisive market, and prices are kind of turning on a dime right here at previous high. Now, if they should break out, we look to see if we can determine where might be a logical place for it to turn back in our favor if we want to sell the market. So what we can do is we can identify, for example, in this range, how many points? 45, 25, 36. So here's like a 9-point swing. So we can look at another 9-point swing, or we can look at a 4.5-point swing. So let's try 4.5 because it isn't that volatile of a day. So here we are at 45. Here we are at 50. So that's 5 points. So 4.5 points would have gotten us into a trade here, actually very, very close to the high tick. Now, the market did turn right on a dime there. Is that a bad thing? Well, in a way, when you're scaling, and you just get hit on the first, you don't have much size, so you're not going to make much money. But nevertheless, it's an extremely high probability trade. If you're trading 2 and 3 at every level, then it's still a very decent trade. But let's just say you start with one lot, then you add another on your second entry, your third entry, you have another, so you have 3 on. Your probabilities are going to be very, very high of capturing some profit before the market goes so far against you, just on natural reversion to the mean. So here we are turning here, and you can take whatever you think is reasonable. Maybe try to ride it back to the breakout point, and that'll give you like 4 points on the trade. So that's not bad. It's money while you're waiting for a better trade setup. But once again, when it goes down, the next thing we want to look at our next level, and we have some support obvious right here, and very close here. They ran the stops and went back into the range. So this is a logical place to put some position to add, or by that time you've been out of trade, so you're looking for a new scale in entry. So you put an order here, and it goes against you right away. And the normal way to think of this, oh my God, I'm so afraid it broke out against me, I'm in big trouble. But when you're scaling, what you're really doing is you're saying, I'm looking at this as a 5-minute or a half-hour chart, and I'm only using the shorter time frame to pinpoint my entry and my stop placement and just sort of have a logical grasp of swings. And so lo and behold, when it comes down here, 4.5 points gets you very close to this place where it bounced. And if let's say you bought one here at the previous support, and it goes against you. So now you're in the old way of thinking when you're not scaling. Oh my God, I've got to be worried here. It's going against me. Oh, I'm down 4 points, etc., etc. But once it breaks here, if you pick it up here, it came all the way back to the breakout point from reaching a level here where you would be adding your next series of contracts. So we're talking again about 4 points to get up to here, which is very, very close to the extreme of the retracement. So this then becomes a break even on the first half of the trade, but it's +4 on the second half. So once again, trading small makes it easy. On the psychology, you just patiently wait, and the market swings around a lot. Reversion to mean is very normal. And there you go, your ideal entry. Now, suppose you want to sell broken support becomes resistance. Now, notice I have these envelopes and these bands, and they're giving us even more information because I'm down here, and I'm about 4.5 points, and I'm right at a place where there's a confluence between these bands. And up here, I'm right against the mid-band. And then over here, back up to a prior resistance point. So this normal reversion to mean is swinging back and forth, which happens a lot during day trading the NASDAQ. And we simply are identifying zones, basically, and we find it's a very high probability how to strategize and maximize a trade. maximize your money management, so that you really have a very high percent probability, a very high percentage of winning trades. And it's a casual way to apply everything that we were talking about on the earlier videos, that your tactics, your strategies are really based on the longer time frames. We looked at, whether it's a 30-minute or a 5-minute or whatever, the time frame is much more kind of peaceful in terms of identifying when is really a good time to focus on a trade that I hold for a while. The scaling is, I think, a really fantastic psychological assistance, because when we're in there and it may swing against us and back and forth, we know that we're not even up to a level of our first add-on scale, so we're completely calm. We know it's never going to go more than $50, $60 against us or something like that. So the scaling then allows us to have places where instead of putting in a stop, I put in another entry. And that is also protecting my position. So don't think, that it's not safe because the market is running through it. Now, another thing I use on this chart is that I have the MACD and the correspondence, the correlation of the peaks in the MAC. Over here we can see the market is much lower. MAC is starting to trend higher, higher lows on the indicator, or just like this one here. If we look at this clearest divergence here, then this becomes very logical that we would take the the support broken resistance point for a sell right when it pulls back to the mid-range of the MACD. So once again, then we have our great trade here. We can go to scaling again the other way, but the first one, the market goes right through it. Second one comes almost to the tick. So we're back in business, and we're getting in very close to the low tick. And this happens again and again and again. When you're scaling, you find that the places like the 50% levels or the 50% expansion or the resistance broken support or support broken resistance, all of these places that we look to define an ideal entry point are going to jump out at us when we have these levels which are based clearly on the chart past action all the time. So basically you'll see it goes on swing after swing after swing in that same manner. Okay, once again on a chart earlier that morning, the same tactic. We identify logical places in the envelope, so you might want to sell there, but you might not because it's not enough. We measure this swing, and we see it was 50-50 up to the resistance level 54-50. So it's a 4-point. So we're seeing a lot of 4-point range of these swings. So once again, you got 4 points here. You add 4 points to that, you're up at 850, and that gives us a scale somewhere around there. And you can see that that was ideal once again. Just simply by doubling the range, we're ending up almost to the tick where they decide to turn. And we have enough of a confluence. We're at the top of this envelope, which is near the top of this one, and we're on an equal level as far as the MACD is concerned there. But it's actually lower because price is higher, and so we have a good MACD double top sell signal. And over here we have a really good divergence retest failure. So this is an RTF, and it has the stop run where they go lower than the previous price by a tick or two. And we're at the extreme of all these bands, and we have the MACD giving us a screaming divergence. So we're in business on just about everything we look at, and this is another 4-point, 4.5-point trade before you're in any kind of give-back mode at all. So once again, we would just keep doing. You can even keep doing the same thing, even when you're wrong. Okay, so you could sell here again, and this time they went through it. But how far did they go? 58, 50, 62, 50 is right up here. Okay, so this one got stuck, but it came down and came way back better than your entry price, so you could scratch the trade. But over here, they're not through too far, and if you sold here, if you waited patiently till you got your obvious divergence, then or indication of completely loss of momentum, and that becomes a great sell. And you're at the top of these bands also. You didn't quite get up to here, but everything else is very favorable for the trade. And then you come back and you make, once again, not quite the 4 points, but 225 to 263, 3.5, 375. And so you continue, and even when the market's trending against you, if you just wait till the definitive signals, like this is a very, very clear-cut divergence, even though the market's dead, and you still had a good 7 to 450, 2.5 points of profit booked. Now, keep in mind, our approach with this blog is on the level of scalping. So it depends how many contracts you're trading. If you want to put 3 on at every scale, for example, then three contracts here isn't bad. If you get 2 points, that's 6 points. So $120 for a few minutes of work. So basically, what I have found, and I'm cautioning, don't anyone just take this video and decide to go in and start scaling, because you need training and you need to know how to do it in real time, and you need to have an understanding of your money management. You have to be a person who's already cultivated that very good, strict discipline, very high level of consistency of execution, so you don't get frozen and you don't take a lot of trades that are not good trades to begin with. But, after all of that, if a person works at it and gets good at scaling, their probabilities are going to be off the charts. They might be a very high percentage accuracy trader, like maybe 98% winning trades, or 97, or whatever. But this is another way to put it all together, with combining market tactics, market structure, and tactics. And feel free, anyone who finds this interesting, or you might be interested in my personal coaching, and I can tell you more about NinjaTrader products, how they interface very well with this trade plan that I'm using. And you'll see my number there on the personal coaching tab. And I'm glad to hear from you. I was very happy to have so many people let me know how much they liked the series when it ran. So now I think it's been quite a while, so I'm updating it a little bit and giving you another element that you might put in your toolbox, and that's to try a little scaling. All right, so that's it. So I appreciate your taking the time to watch, and good luck trading. We'll see you then.